Hi, welcome to the channel. If you haven't been here before, my name is Langers and I'm trying to show trading in the real world. So there's no fake stuff here, it's real world trading. And all you'll see is me with a cup of coffee, because we all know Scruffy likes a coffee, and the screens in real time. Now, if you have a request, by all means drop it in the comment below and I'll do my best to clear it up. And if trading's your thing, please consider subscribing, because it helps the channel and I'd genuinely like to see it grow and see if we can help some people, because I don't sell any courses. What you see is what you get. So what am I doing today? Well, I run a little Facebook group just for shared learning amongst the guys. And one of the chaps there is asked if I wouldn't mind having a look at the New Zealand dollar versus the US dollar. And it's for this weekend, 21st of March. So I'm going to have a look through it and show you how I would break down a chart to trade. All right, so come with me and I'll jump on the screen and we'll see what we can find. Right guys, here we are. So Daniel asked me to give you my thoughts on this pair. Well, we're in crazy times and the markets will swing backwards and forwards and they're blowing through levels like they're not even there. So you have to be a little bit careful about how you look at these. But look at the bigger picture. Go out to your monthly. And if you just scroll this down, you can see this has happened before here. Now this was the 2008 crash, and that was the credit crunch around 2014, 2015. All right, so this has happened before, and it busted through that level, okay, here. So we'll just put a line on there so you can see it. There you go. So that's quite a key area, and it just smashed through it. Now looking across to the left, because you always look to the left to see what's going to happen to the right. And what that means is self-fulfilling prophecy, if you like. This is the hard right, the here and now. And this is where you get your clues from. And sometimes you have to go back a long time. Now here we are, 2008 we have to go back to. So the next level is down here. So there's a long way for it to go. But because the market is moving so fast, levels become difficult to predict. Okay. So good old Fibonacci is what I'd be looking at for this. So if you look at your extension, which takes it from there to there and back up to where it came from, the key areas that you look at is the 127 and the 161. And sure enough, there it is there. It's touched it. Okay. Sure as eggs. Just pull that across so you can see it. That kind of puts it into perspective a little bit. So you had that big move. And if you remember when I tell you, if there's a strong directional move, it'll retrace 50%. Well, from there to there, and it retraced back up to bang on 50%. Then it went off on its journey down. And it's also based off this strong move here, touched the 127 extension. All right. So that's interesting to me, because that's telling me this is a key area now. All right, so I can put a line in here on that 127, and I know that's a reaction point. So I need to try and find some more. So how do I do this? All right, because there's a directional move that came up, retraced. Take it down onto your weekly and you can start seeing what's going on. So the new directional move is this, all right, and it's slowing down. So again, put your fib on. So if I put an extension onto this, and you'll notice I'm using the extension rather than the retracement. Does the same job, it's just I've got mine already made out as to what I want to be looking at. All right, so the area I'll be looking at with interest is here, this line, okay? So I'll now be looking at this area here, and I'll also be looking here. Now this, guys, is just a way of marking up a chart to show you where you think reaction will happen. Take it down onto a daily, just so you can start seeing it even more clearly. And now this is telling me a picture. All right, that is the move. So there's your top. So let's just see what happens now. There, the line up, everything's lining up to this area here. All right, and it's also lining up here. So that level and that level are going to be two key players. As we going into Monday, anything could happen this Monday. When the markets open on Sunday night, this could gap either way. And if it does, I'll be looking at these two levels to decide which way I'm going to start playing the market if I was trading this pair. Okay. It's a hard one to call, guys. It really is, because nobody knows what's going on. But if you're looking for two areas to work on, 51.30 and 61.16 are the areas I'll be looking at. Okay. And all I'll be doing is I'll be waiting for it to come here and I'll short it, or I'll be waiting for it to go there and I'll be looking for the retracement. Simple as that. Very, very easy way of looking at it. Now, I drew these lines with Fibonacci. Let's see how they react in times going back over. Now, I drew them from here, this section, and look what's happened in the past. It's actually caught the exact areas from the past. So Fibonacci is one of those tools that's used because it's in nature and in numbers, and that's all the markets are made up from. Because if you think about it, they're made up of currency, which is numbers, and they're driven by human nature. You know, because we all look at the markets different, and it's a human person deciding whether to buy or sell. So to me, it just makes perfect sense. And it's like most things, you have to use the right tool for the right job. And in crazy markets like this, your Fibonacci is a good tool to use. Let's drill it down a little bit. We'll look at the daily and we'll see how the Ichimoku is reacting. Now, as you can see here, it's flattening out this section. So I'll be paying close attention to that, because if that's starting to square off, that means it might start crimping down, which will tell me a change in direction. Because if you look at the distance from there to there, it's quite far. And if you can imagine a rubber band, when it gets stretched, it'll slam back. And that's a good way of showing you, because look, pulled away from the cloud, slam back to it. Pulled away from the cloud, try to go back, pulled away from the cloud, and eventually it slams back. And it does it over and over. And these are just clues, guys. That's all you're looking for. You're just looking for clues. Drop a Bollinger Band on. See what's happening with the deviation. Now that's an interesting one because it's flared out and the market is closed outside it. Well, it's actually 1, 2, 3, 4 closes outside of the Bollinger Band. It can't do that indefinitely. It'll have to come back. And what's happened? That's tried to. So on the next day, if there's a close inside there, that's coming back up to this level that I've drawn. All right. Take it to a 4 hourly so we can see it a little bit clearer. And here we go. I'll just take that bolly off for a second. What do we see? Well, you see this area here that I've identified. It's reacting constantly at that level. Been away, came back to it, went down, came up. So there's a good chance that could come back up. All right, let's have a look at the Bollinger, see what it has to say. All right, closey, 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 closey. Hits the level, closes inside the Bollinger, pushes up, hit the moving average, came away, but it hasn't made a new low. It's gone back up, retraced. That's coming up. Just draw a little trend line in there. There you go. Right. Could take it all week, but it could get to there. So yeah, everything tells me those 2 levels are what are going to be key. So they're the levels I'll be looking to watch, and just keep an eye on the market, guys. Dead simple. Dead simple. You know, the Bollinger's telling you it's pushing down heavily. If it breaks this, it is going here. And if it doesn't break that, it'll work its way back to there. Okay. And that's kind of the way I would look at this. Would I be trading this on Monday? No. Not just looking at that. I would want to see some kind of price action on Sunday night to see which way the market's going. There's a lot of news driven swings at the moment, and I don't like to trade the news, because what normally happens is there's a news announcement, the market spikes one direction and then inevitably goes the opposite way and carries on in the journey it was going on anyway. It's just the way it is. So I have a tendency to keep out of that. But for this weekend on this pair, they're the 2 levels you want to be watching. All right. So it's a hard one to call. I hope it makes sense, but don't take what I say as financial advice. But if you are taking my advice, wait for the markets to open on Monday morning and see which direction this is going in. You know, let it play out on Sunday night. Look at it after London opens on Monday, and that'll give you an idea as to which direction. And then if it is going either up or down, you know how far it's going to go. All right. But it's going to pivot off this section and up it goes. All right. And let's have a look, see what the weekly pivot is before I disappear, because that's just popped into my mind. So there's your pivot for the daily. Have a look at the weekly, and there you go. Resistance 1, bang on the money. That pivot is close to it. And if it's been down this far, because pivots normally contain themselves, it's been down to 3, it'll work its way back up to the pivot, and it's bang on the yellow line that I marked at that level. So everything tells me the levels that I've drawn are correct. Okay. So there you go. Nice and simple one, guys. It's going to be an interesting weekend all around. And if you saw some of my other videos, you saw I shut every single position I've got off. I have nothing open. I'm just waiting to see the dust settle, and then I'll be looking to get in. A good market to be watching if you want something, is gold. It's not an overnight sensation, but keep an eye on gold, wait for it to bottom down, and that'll be a good investment for you, because it's what I'm going to be looking at over the next 2 weeks. Anyway, do what you love, money will follow. See you on the next one, guys.